Mike des. Hello, welcome to the video. This would replace my stream on, well, supposedly Wednesday, but, let me explain, alright? So, firstly, the Wednesday and Friday streams will now be changed to Monday and Friday nights, right? 12 p.m. UTC as usual. Um, the content will stay the same. I'll still teach accounting, right? Specifically on these two periods. And secondly, if you're seeing this video, it means that I am actually not free this week. So I've pre-recorded two videos, right? One coming out, uh, on Monday today, right? And the other one will be coming out on Friday. So do look forward to that. So today we're gonna explain depreciation and amortization. Let's start with depreciation first because it is more commonly known, right? So, what is depreciation, right? What is depreciation? Depreciation, my bad. I can't pronounce it properly. Essentially, it means, usage, right? So, for those of you who have studied accounting for a while, you might know something called a matching principle, matching theory. So, what this means is you gotta match the revenue or income with the expense, right? Essentially, you're gonna spend money to make money, right? I think you've heard that term before somewhere, right? So it's the same principle here. Essentially, for example, the easiest one is when you sell an item, right? You obviously earn some money from selling, right? That's why you sell at a certain price, right? Then the next question would be, well, how much did you actually pay to number one, get the goods in your own possession, right? So your transport, your initial cost, right? Even licensing, all that. Sometimes it could be added in to the cost of the good. Then you subtract it to find out how much profit you have, right? You subtract it from the revenue that you earn. So it's the same concept here, right? Depreciation, it's an expense, right? And what do we usually apply it to? Usually apply it to things like machinery, right? Um, your, I'll say office equipment, right? Your motor vehicles. Now, you've noticed that these three actually share something in common. It is actually non-current assets, mainly. Why is that? Because usually for non-current assets, you would want to use it for honestly as long as possible, right? But in the real world, it's actually not feasible, right? So this is why we actually come up with depreciation, right? In order to actually kind of estimate how much we're using every year, right? So, and then what do we do with non-current assets? Right, so for machinery, it is the most clear example. Why? Because, well, you use machinery to produce items, right? For example, your factory, um, say you're making plastic bottles, right? Making plastic bottles, and you have a machine, we have a mold that is specifically designed to make just that kind of plastic bottle, right? So, right, the machine in that process will get slightly deteriorated over time, right? Because as you use something more and more, things don't last forever, right? So eventually the machine will break down, it will need maintenance, things like that. You need to replace some parts, something gets broken. All these sort of things kind of get factored in by depreciation, right? So that is one of the reasons why we use it, right? And of course, the machine is capable of generating revenue for us, right? Because we make the bottles, then we sell the bottles. So usually, this depreciation is included in the cost of the plastic bottles itself, right? Even though it's an estimate, compared to the raw materials, which has an actual fixed cost, right? Depending on where you sourced it from and how much you sourced, right? Um, but you still include it under a general cost of this item, of this plastic bottle, right? Office equipment, well, you need as your company becomes bigger, right, you need more staff. You need to do admin work, right? Maybe accounting. I don't know. Yeah, you probably need a computer in your office, right, to do all that. You can't really rely on your own personal computer for everything, right? Because sometimes information is should be kept secure, right? So you gotta have a secure computer out there that hopefully stays safe, right? Depending on how you use it, right? So that will be under office equipment. And how does it generate money for you? Well, you can think of it as an indirect way because you're not producing something immediately, right? If you're in a manufacturing company, instead you'll be using it to, manage your shipping, right? Manage all the logistics behind it, liaising with your suppliers, liaising with your customers. Um, so it's a very indirect way of generating profits. Initially, you probably wouldn't even see profits; you just see expense going out, right? But eventually, as the whole system comes together, it actually makes your entire process more efficient. So that's why we say this helps with generating profit, and therefore, this depreciation isn't really included under your cost, right? You could apportion it, but it shouldn't fully be under the cost of the goods, right? So that's why we have something called administrative expense, right? Then we just park this depreciation underneath it. And yeah, motor vehicles, same thing. You gotta transport your goods somewhere, right? Unless you keep relying on external logistics, then that is another story. But if you have your own delivery vehicles, that would be included under your expense itself. It shouldn't be included under cost, if I'm not wrong, cost of the goods, right? Instead, it'll be under maybe operating expense instead of admin expense, right? So those are some examples of how we can classify depreciation, right? But the bottom line is depreciation is actually just usage, right? You incur this as you use an item over and over again in order for your business to run, right? And that item usually won't last forever, right? Even the most durable fans, most durable machines would break down after, you know, maybe depending on cycles, how many cycles they've used it for, right? So then, now that we've understood what is depreciation, right? Next, we ask ourselves, how do we intend to actually calculate, right? How to calculate? Okay, a few ways actually. So we are going through two main ways, right? One is straight line method. The other one is reducing balance method. And I think, well, for those of you who play some video games, you might be more familiar with how I explain this, right? Hopefully, this works for um, the rest of the audience. But if not, do let me know. I can try to come up with a different way of explaining. But for now, this is the one that I like using for myself as well, right? So let's start off with straight line method because it is more, how do I say? It's more straightforward. Right, so let's label this number one. Okay, firstly, some informations that you actually need to acquire before you, before you start calculating, right? The first one is cost, right? How much did you actually buy it for initially? So initial purchase price, right? Okay. The second thing that you need, actually this applies to both. So I'm just gonna, pardon me. Let me remove this one. These are what we call required information. Okay, so these are basically what we need to find out before we start computing at all, right? So first one is cost, right? The other one is residual value. Okay, so what does this mean? It means that, sometimes at the end of the entire lifespan of the machine, you can actually sell it for a small amount of cash, right? You get some cash back for selling an item, whether to garbage disposal or the company that sold you is willing to buy it back. I think nowadays is more common in terms of secondhand phones, right? So if I'm not wrong, Apple is doing this where they're giving you discounts on your new phone if you return your current phone to them, right? So it's an example. So that amount that they deduct can be considered as residual value, right? So at the end of life, at the end of life, uh, what can you sell it for, right? Or how much can you sell it for? Okay, instead of what. Let me change that real quick. How much can you sell it for? Okay. How much can you sell it for, right? The next one would be how long do you intend to use this equipment or whatever for, right? So this is what they call useful life. Okay. So how long can you realistically use it for, right? So for example, let me think, right? So computers, right? If your laptop, usually people will replace after 5 years, when it starts to run very, very slowly, the hardware isn't keeping up with all the software. I think it's especially relevant nowadays with video games, right? Your AAA games nowadays can really only be run on, the high-end graphics card if you want high quality, gameplay and such, right? So yeah, and nowadays the older graphics cards aren't really cutting it anymore. So this is a more obvious sign, I think, right? So nowadays the useful life of computers might be shortening as well. So yeah, as far as we know, in the past it's probably 5 years. Now could be even less, right? But usually useful life is determined by the company policy. So this company, if they usually would bulk buy, equipment, right? So they could get it from the manufacturer. They ask the manufacturer, oh hey, I have this machine, right? How long realistically can I use it for, right? And then the manufacturer of this machine, they'll say, oh yeah, this machine is good for maybe 10 years, right? 20 years, this sort of things, of constant usage, right? So the company has their own policy, and based on this policy, we can do computation of depreciation because, again, I need to reiterate, depreciation is not a hard and fast, how do I say? It's not set in stone, the rules, right? It's an estimate. So, and these are the rules that you apply when you are making an estimate, right? Because the estimate has to be reasonable. It should be backed up with some proof, right? So usually the companies will do this, right? But if you're working on exam questions, usually these are either given or you can derive it from other information, right? So this is company policy. What else am I missing here? To be honest, it's not much. Maybe the next one would be percentage of depreciation. I'm gonna simplify depreciation with DEP. Okay, so if you see that, it'll be you know that it means depreciation. Okay. So this one also same thing. Deals with company policy. Company policy, right? So now we know the required information, right? The next step is to know which one you're using, which model. Straight line method, reducing balance method. Okay, usually this is also determined by a company, right? And it should be standardized. Standardized per group of equipment. So what do I mean by this? So for example, your computers, if you choose to depreciate by reducing balance method, then all your computers should be doing the same thing, right? Should be under the same policy, right? Computers, maybe you can classify it as maybe vans, or all vans should be depreciated under this amount, right? So you can choose between the two, but you have to keep it standardized across one group of equipment, right? So now we can go straight into straight line method, right? So what does this mean? Well, straight line method just means a line, right? So for example, this company says they bought something for $1,000, right? So this is the cost. The next one would be residual value. We could say maybe here we write 0, right? I'm going to run through a few different scenarios with this, right? So to keep it simple, we put 0 for residual value first, right? Useful life, we can write UL. Maybe 10 years? I think 10 years is fine. Percentage of depreciation isn't important here, and you know why soon. Okay. But for your info, it is 10%. Okay. So straight line method deals with this, right? You spread out $1,000 over 10 years. Why is it only $1,000? Because your residual value is 0. So $1,000 minus 0 is still $1,000, right? So this means that it's $100 per year, and that will be your depreciation, annual depreciation. So this is how much you recognize every year as an expense, right? Doesn't matter what item it is, you just recognize it after you have, deemed that yes, this thing should be depreciated, and you just carry on with the calculation, right? Next scenario that we have is, what if the cost is 1,100, right? The residual value is 100, and useful life, same thing, 10 years, right? And then percentage, again, it is slightly different, so we actually don't compute this here, right? Because it's irrelevant, right? Now, instead of 1,000, you have 1,100 minus $100, right? Because remember, at the end, you still have $100 left over of worth for this equipment. Why? Because you could sell it for $100, right? So this $100 isn't wasted or isn't expensed away, right? Purely for this reason, right? You could still recuperate $100 from this, right? So over 10 years. So what does this mean for you? This means it's still the same number, $100 per year, right? And this is your annual depreciation, right? So now we go into the second method. So this is actually straightforward, right? So we go into the second method, reducing balance, right? So what does this mean? If we look at the graph, if you like looking at graphs, the depreciation actually starts out higher and then it decreases over time. So it looks something like this, right? Okay, maybe I should add a... Okay, I'll add a graph for this as well, right? So this is... The graphs kind of show the depreciation expense over time, right? So this is DP over time, DP over time. Okay, so now we go down, right? So what does reducing balance method mean? Well, it actually means I would like to illustrate using a kind of game mechanic, right? So say your cost is your max health, right? This is your cost, right? Residual value is kind of like minimum health. Okay. Okay, and for this calculation, actually, residual value isn't relevant, right? I could include it, but honestly, I'll just take it out. Okay, to avoid confusing you guys, right? And then you have something called carrying amount. This is something new. I'll explain it later on, right? You can think of it as current health. Okay, and this is your carrying amount, right? And then finally we have percent, right? So this will be maybe damage, right? This is the percent. Okay, so how do we go about this, right? We've laid out some of the rules, right? Same thing, we have $1,000, right? Max health. Oh wait, let me align it a little better for you guys. $1,000, right? Current health is still 1,000, right? Let's say this is first gen XX, X0. Yeah, okay. Then damage percent would be, well, let's say 10%, right? So at 31st December x0, meaning 1 year has passed, right? So if you can see, okay, so at the end of the year, your damage, this is damage percent. So your actual damage will be 10% times 1000, which is 100, right? You do 100 damage, and then so your max health doesn't change, right? But your current health, oh my, what happened to my spelling? Oh dear. Current health, right, would be 1000 minus 100, right? So that would be 900. Okay, and your damage percent doesn't change, right? So what this damage actually means is your depreciation. Depreciation expense, annual depreciation, right? Your current health is still your carrying amount. That doesn't change, right? So to illustrate 1 more year, right? So on December x1 instead, so 1 more year has passed, right? Your damage will actually be 10% times 900 instead of 1000. Okay, so it's 90. So as you can see, this actually fits the graph. So at the start, it'll be 100, then 90, then 81, etc., etc., right? So it actually decreases over time. And okay, current health would be 900 minus 90, which is 810, right? Okay, so if we want to write it out in formula terms, right, this one you probably have seen out there because people usually just follow the formula. For me, I don't like memorizing formula because my memory doesn't allow for it. So I tend to come up with something that I can remember for myself, right? So for method one, it is really just your or if you want to write in game terms, max health minus your minimum health, which is your residual value, right? Health. This is your residual value, right? Divided by the number of useful lives, which is number of turns, right? The second one would be your max health, or your current health actually, is your current health times 1 minus your your damage percentage, right? And this would be your, okay, this one would be annual depreciation. And if you want to just find out the annual depreciation, right, it would just be current health times your damage percent. Same thing, annual depreciation. Oh my, okay. Okay, so this is how we calculate, right? So I've written out the formula. It's not as to me it's just very dry. Right, I prefer to use the method above, right? But whichever works for you, just use it. You could come up with your own one as well. After understanding how this process works, you could write your own formula, you could simplify it for yourself, right? So for now, I hope this is enough foundation, right? Okay, then the next question is why? Why do you have two methods, right? Why do we use multiple methods? In fact, there are more than two. There are actually a lot. There's double reducing. There is, I think there's some funny ones as well, like customized ones. But, yeah, why do we come up with all these different ones, right? To represent, right? To represent the usage, right? Because sometimes you don't use something consistently over time, right? Maybe this machine specifically, it's for seasonal, right? It's like a seasonal thing. When the time comes for this period, you use it. Then after maybe the seasons change, right? You don't need this product anymore, so you retire that machine for next year, right? So you need to represent the usage properly. You need to represent the amount of wear and tear properly, right? So what do I mean by this? Or obsolescence, right? So what do I mean by all this? Right, something that you use consistently, consistent usage, you will usually classify under uh, the first method, which is the straight line method, right? Consistent usage or consistent wear and tear. So what do you usually put under it? Well, your cars, right? Your motor vehicles will be under that. Maybe your furniture, right? Furniture would usually be under there as well, right? Things that are more reliable, right? Things that are more built to last, right? You usually put those under um, consistent usage, straight line method, right? Buildings is also one, right? So some countries, their buildings can only be held for a certain period of time, and then that period of time might be considered as their useful life, right? Sometimes they put 20 years, sometimes 10 years, depends on company again, right? So what about the second one? So now, well, the first one is more consistent, right? um the second one would be more heavy usage at the start, right? So things like can't really think of much for this, right? Heavy usage at the start, um maybe blades, I guess. Those grass mowing machines, right? Those things wear and tear. Their wear and tear is very heavy at the start, right? Because everything is sharp, uh, and then suddenly after maybe a while, it gets very very dull, right? It's the closest analogy I have for it, but I might be wrong here, so do forgive me. I'm not very well versed in this part. But the other one, which is obsolescence, is something that we see if we're using computers, right? So again, in my previous explanation, I said computers become obsolete very quickly, right? So this is when you use reducing balance, right? Computers, electronics, not all of them, but those that will become obsolete very quickly, right? That is one, right? The other one would maybe be something that, let me think. Can't really think of much right now, so I'll just leave it at this, right? So why do you use different methods? To sum it up, really, is just to better reflect how things are in the real world, right? We don't want to put everything under straight line method just because we are lazy or something. No, because some things in real life just doesn't behave like a straight line. So, and yeah, uh, because of that, we use different methods, right, to try and really simulate real life conditions in accounting, right? Again, if you guys probably know, straight line method is more, simple, right? So this is why most people will want to use this, right? And if you can justify it, you can go ahead with it, right? This one is more complicated to actually set up because you need to keep track of all the different variables, right? And then, of course, like again, mm, the assets that this applies to are different, right? Depending on how they're used, right? So, to be honest, I think okay, I'll just leave this out for now. It's not exactly needed, right? Okay, what else do I need to say for this? Amortization is actually the same. Uh, Amortization is the same, but uh, but for intangible assets. I wouldn't go into detail on this because I've yet to cover this in my lessons. So I will come to this in the future. So maybe instead of this, I'll just say depreciation. Let me remove this. Okay, so it's just depreciation, right? And yeah, I think we can end it off here, right? Few things to note, right? Again, my stream schedule will have changed, right? So you see this on Monday instead of the allocated Wednesday. So please don't be surprised when you don't see me streaming on Wednesday. I wouldn't have time for it. I'm so sorry. Um, I'll update it on Twitch and YouTube as well, so you guys can refer, right? And then, yeah, if any of this explanation doesn't work for you, again, firstly, it is perfectly fine. Okay. Secondly, do reach out, right? Reach out to people who know. Could be me. If you feel that I'm not trustworthy enough, you can look for your own mentor, right? Your own someone who is experienced in the field, right? They could come up with an explanation that better suits you, right? So just know that not everyone is, receptive to the same explanation, right? It's something that works for someone might not work for you. So be sure to, look out for, um, just ask for help when you need it, right? Okay, other than that, I think that is it from me today, right? Thank you very much for watching to the end. I'll see you guys, well, should be next week, right? But do look out for the video on Friday as well. We'll use some of the information that we learned today on Friday. So, and yeah, that's it from me. Thank you. See you. Take care. Bye bye.